Hi, thanks for watching. I appreciate you being here. Welcome. A few weeks ago, I started making some budget videos because I love watching those on YouTube. I love watching other people's budgets. I love watching how they spend their money. I love it all. So I thought that it would be a fun way for me to share and document my journey. But recently, I started thinking about expanding my budget series. And one of the things that I've decided to start doing was reveal my zero-based budget with you. In this video, I am going to go over what a zero-based budget is. I'm going to provide some background information on my family's own zero-based budget, and then I am going to do a detailed breakdown of the previous month's budget. But before we get into it, here's a little bit about me. Hi, welcome to my channel, and I'm glad to have you here. Here's a little bit about my family. Our household consists of myself, my husband, and my toddler. My mom also lives with us, but she's not included in our finances. My husband and I both went to graduate school, but we no longer have student loan debt, fortunately. I work in banking and he works in aviation. I handle all of the family's finances, and I love my role as the self-appointed CFO. I love talking about all things money, making money, saving money, investing money, and optimizing my portfolio and my finances in general. I look forward to taking you on a wealth building journey with us. I hope you enjoyed the videos and the channel as a whole, and I look forward to getting to know you. I am very open, so feel free to send me messages at any time or starting conversations in the comment section below. Okay, so what is a zero-based budget? A zero-based budget is a method where all of the expenses must be justified for every new period. Companies use that a lot, but individuals can use it as well. When companies use it, they typically make a budget for the entire year. Most individuals make their budget 1 month at a time. Even though some people do try and estimate a year-long budget, I happen to be one of those people, but the most accurate budget you are going to have is going to be month to month, because you never really know what might crop up besides your regular expenses. Usually a zero-based budget starts at zero and it ends at zero. The idea is that every dollar has a job. When you start your budget on January 1st, you don't have money left over from December 31st, because the idea is you put all of that December income to work. There is no such thing as idle cash in a zero-based budget. The money goes either towards bills, paying down debt, investments, or maybe even medium-term goals, the ones that are not long enough for you to risk putting the money in the market, but not short enough that you want to keep the money in cash. So what you would call a sinking fund. Whatever budgeting style you adopt, there are always some pros and cons. A benefit of a zero-based budget is that it requires you to justify a use for every dollar. That means you are less likely to have money sitting around that has no real purpose, and you are less likely to waste money. Of course, the downside is that it takes a little bit of time because it requires more work. If you have to force yourself to justify a use for every single dollar that comes in, there's a little bit more thinking that goes into it. But I don't think that the downside justifies not doing it. Here is the anatomy of our own zero-based budget. My family's zero-based budget is broken down into 3 main categories. The first one is bills. These are our obligations. We don't have a choice. We have to pay them. This is how we put food on the table. This is how we keep a roof over our heads. We also have sinking funds to meet medium-term needs. And then we also have investments. Investments, whether it is for college for our son, where we save in his 529, or money that we put into our brokerage account for long-term use. You will notice one thing in our zero-based budget is that we have a lot of credit card usage. The reason for that is because we put everything that we can possibly put on our credit cards, we do it. You're probably wondering, how does she eat? We don't see any grocery allowance. Well, that's because I pay for my food with a credit card, so I don't really spend cash on food. What ends up happening is I get a bill at the end of the month and I pay my credit card bill. The same thing for gas and household and personal care items, or any purchase really that allows the use of a credit card. For example, I had an issue with my sink a few months ago and I needed a plumber to come in. He came in, but he did accept credit card payments. Therefore, I paid with a credit card. That's not something that's going to come up as an individual breakdown in my zero-based budget. What we will see is the aggregate when I pay the credit card bill. I do have a separate budgeting mechanism that allows me to track my expense categories so I don't go over, but overall, you will not see it in this particular budget. The reason why we do that is because we want the points. We want the protection that using a credit card offers. You are much more protected and much more insulated when you use a credit card versus when you use your debit card or even when you use cash. And it also allows for better tracking. I am registered for one of these popular websites that allows you to track every transaction that you create, and by swiping my card, it gets uploaded to that website and I categorize it. Also makes the tracking much easier. Another thing that you will not see in my zero-based budget is things that are related to medical. The reason for that is it goes out, but it also comes right back in within a matter of days, since we use an FSA to file claims and get reimbursed for anything that we spend. The FSA money is still our money, but because it comes out of our paychecks before we ever get to see it, it's not cash that we ever have to really move around. A good example of that would be if I pick up my prescription at CVS. I have a $10 copayment on my prescription. I swipe my credit card for $10. I immediately get a receipt, and within a couple of days, I use that receipt to file a claim and get some FSA reimbursement. That FSA reimbursement goes into my account. I use that $10 towards my credit card bill. So although the money is moving, it's moving in and out in the same amount and it zeroes itself out. So for the sake of simplicity, anything that nets to zero, I completely exclude from this budget. All right, let's get to the previous month's $0 budget. If you are enjoying this video so far, don't forget to hit the like button so the algorithm knows that it's good. And of course, subscribe for more content. If you think any of the information that I provide here might be helpful to somebody else, be sure to share it with them. On the screen, you should be able to see my handy Excel spreadsheet. That is where I am going to show you everything we earned, spent, saved, or invested in the month of May. This is classic cash flow in and cash flow out. If you're curious about how money moves in this household, make sure you watch the entire thing. I am going to go through the different categories and explain them, but for the sake of time, I'm going to try to consolidate them as best as I can. The first category is rental income. We have 3 rental properties. 2 of them we own directly and we manage it ourselves, and the third one is one that we split with somebody else, and in exchange for them fully managing it, we get a smaller portion of the rental income. I am not going to break down how much rental income I got it from each property, but I'm going to tell you how much rental income came in total for the month of May. Across all 3, the total rental income was $5,104. The next category is my income. I work a regular job where I get a W-2 just like my husband. This income is the income that we get after we contributed to our retirement. We paid for health insurance, we've paid our taxes, we've paid for life insurance, and anything else that you can imagine that gets deducted from your paycheck. My total income for the month of May was $4,654. My husband's income for the month of May was $8,187. For the sake of time, I am not going to break down how much we got per paycheck. I'm just saying the total for the month after all of the paychecks have come in. The other income category, there always seem to be something coming through every once in a while. Sometimes it's nice and sizable in the form of $1,000 or more. Sometimes it's just a couple $100s, and sometimes it's very small. It varies and it comes from different sources. In this case, the other income was a very small amount of $11. That is cash back that we got from Rakuten. You're probably wondering, why in the world would I consider cash back to be income? Because I would have had to spend some money in the first place in order to get it. I actually did not have to spend any money directly. That is money from when my husband booked a hotel room when he was traveling for work. So actually his work paid for that hotel room and I ended up benefiting from it. So that's a free $11. The fifth income category is interest income. And for the month of May, we got $10 in interest income. Now, this category is a new one that I've added. And the reason why I did that is because I'm starting to realize that I'm not giving you a full picture if I am not discussing the FSA or HSA reimbursements. I actually don't have an HSA right now, but I will next year. Right now, I only have a healthcare FSA, but it is the same principle. Let's talk about this for a moment. They either pay your provider directly or you pay your provider and you get the money back. I have done it both ways depending on the circumstances, but there are some situations that I find that I am spending the money upfront, putting it on my credit card, and I'm getting reimbursed before the bill even comes due. Not talking about those healthcare reimbursements, I find that might be giving an inflated impression of how much money I'm actually spending and putting on my credit credit card every month. So this isn't really true income. Rather, it is an offset of the credit card bill, which is why I highlighted it in pink. It's easy to not pay attention to the $10 or $15 medical copays that are racking up the credit card, but in May, I actually happened to get prescription eyeglasses, which tend to be pretty expensive. Once I was able to get that reimbursement, it was a reminder that I had put something expensive on my credit card that would be reflected in this cash flow discussion. So I thought that it was only fair that people knew it was a wash. In any case, between co-payments, mileage reimbursements, parking, and new glasses, I ended up with $558 back in reimbursements. So whatever amount that you will see that I paid off my credit card with, more than $500 of it came from an FSA reimbursement. Now on to the expenses. The top expense is housing. We pay $2,700. That includes principal, interest, taxes, and insurance. All of it is escrowed. $2,700 is the total monthly payment. Of the 3 rental properties that we have, 2 of them have mortgages that we're responsible for. All 3 of them have taxes, and all 3 of them have insurance expenses. In total, our rental mortgages added up to $2,550. In addition to the monthly payments that we make, we also have other expenses related to these properties, whether it is maintenance, water, trash, landscaping, snow removal, electricity for the common area. If there's anything that you can imagine that the tenant is not responsible for, it falls under this category. And for the month of May, that added up to $1,047. Daycare for our son is another major expense that we have. It is a fixed amount. We pay the same every month, $1,360. We have 2 cars, one of which has a car note. The car note is $940. If you are interested in the backstory of that car note, I did make a video on my experience buying a car during COVID, how long we had to wait for it, what the loan process was like. Also, we ended up buying a plug-in electric hybrid vehicle. That has come in very handy with these high gas prices lately. If you're interested in what our experience has been, make sure you click on the link and check out that video. I will be linking it in the description box below. We also have credit cards. We do not carry any balances, so we don't have credit card debt. Every expense that we put on the credit card is paid in full every month. That's what that PIF is. It's a reminder that all of the cards are paid in full. Our main card is the American Express Gold Rewards card. For the month of May, that balance was $3,184. We also have a Chase Sapphire Reserve card that we either use for travel or we use it when people say that they don't take American Express, because that is a Visa, so that's going to be widely accepted. The balance on that was $1,300. And then we also have a Bank of America credit card. That one, I don't use it as often, but it is one of my oldest lines of credit. I want to keep it active, so I will put some expenses on it occasionally. This month there was no expense on it, so the balance for that was 0. We also have a Target Red card that I will use on occasion if they either have some sales or if I want to take advantage of the 5% discount for using the Target Red card, or if I want to take advantage of expedited shipping. There were no purchases on that card this month. Again, $0 for the balance. The electricity for the month of May was lower than it has been previously because we do have solar panels, so as the days get longer, the bill goes down. It's not quite at the 0 amount that I'm used to seeing in the summertime, but it is the spring balance, so we are looking at $83 is what we paid. And then we have insurance, and that insurance, it covers both of the vehicles as well as personal items. That is the same insurance company that insures our real estate, but that portion of the premium is billed separately. All of that totaled $220. The other expense category is either things that I spend money on that I was not expecting to, or maybe they are things that I was expecting to spend money on, but they do not come up often enough to warrant having their own separate category. This month I had 2 major expenses in the other expense category, and one was $1,600 for landscaping, and the second one was over $1,500 for excise taxes on a vehicle. There is a story behind both of these. If you are curious, check out the other budget video that I made for the month of May. I will be linking it in the description below, and that will give you the background story of what happened with both of these expenses. If I scroll further down, you will see this one says money left over. Money left over is money that I can either save, invest, or spend at my discretion. But really, that money is more likely to be saved or invested. You will notice that there are a lot of categories that you would expect in a regular household that you don't see. For example, where's my cell phone bill? Where's my internet bill? Where's my food? All of that goes on the credit card, which is paid in full every month. Once I pay off those cards and you see a category that says money left over, that is really saving and investing money. There is no more discretionary expense because all of that has been put on a card one way or the other. Let's take a look at what I did with the leftover money for the month of May. You'll notice that the first line item here says Roth IRA spouse. That is my husband's Roth IRA. We put $1,000 in the month of May. The limit for 2022, if you are under the age of 50, is $6,000. The goal for this year was to contribute $1,000 every month to his Roth IRA until we reach the $6,000 in June, and then we will reallocate that money towards something else. That is the second to last contribution we'll be making this year. For my Roth IRA, the number is 0. The reason for that is because I had the bright idea of front loading my Roth IRA all in the first week of January of this year. Evidently, I am being sarcastic. That was a terrible idea. The market has taken a beating and we are down almost 20% year to date. I probably would have been better off if I had decided that I was going to spread that money around over a longer period of time. And that is why the contribution amount for this month is 0. Not because we don't care about my Roth IRA, but because I have already reached the maximum limit. The third item here is the 529 plan. That is a college savings plan for my son. For this month, we did $650. Before I move on to the other categories, I want you to look at this gray section here. That gray section is where I make sure that I am putting all of my money to work in one way or another. The goal of this should be that it is 0. It shouldn't be negative and it shouldn't be positive, because if it's negative, it means that I spent more than I could afford. It means that I spent more than I had. If it's positive, it means that I have idle money sitting around doing nothing. My money should always be working for me, whether I am paying bills, saving, or investing. Let's see what I did with the remaining $323. I have mentioned this in some of my previous videos. I have a goal to aggressively ramp up my contributions to my after-tax brokerage account. I am committed to this plan and I said that I would do it no matter what. In order for me to make it happen, I put $1,500 in my brokerage account. You will immediately see that this is a negative number, so that is not good. That means that I had to find a way to bridge this gap and bring this to 0. But before I do that, I am going to skip straight to iBonds and have a brief discussion about this. I started contributing to iBonds last year. My first contribution was in October. iBonds have an annual calendar limit of $10,000. When we started last year, I did $10,000, my husband did $10,000. As soon as it was a new calendar year, we went around and did the same thing again. So we were able to get in another $10,000 each in iBonds into our accounts. And normally that would be the end of it, but it doesn't say per household, per entity, per family. It says per tax ID number. I happen to have an EIN as a sole proprietor, and I decided that I was gonna do another $10,000 in iBonds. Using my EIN, I did $10,000 in iBonds under my sole proprietorship. But if you look back over here, all I have done was make this worse. How do I fix that? I went into the American Express Emergency Fund and I took out $10,000. Then I went into the Bank of America account and took out $1,177. Instead of contributing to my sinking fund in May, I actually had to take money out, close to $1,200 to complete that big landscaping project. I used my American Express high yield savings account to fund the iBonds. And if you look at these two categories here, this is just a wash where I moved money from one type of emergency fund to another type of emergency fund. Even though it means that that last $10,000 is now locked up for a full year, I am not terribly worried about it because I still have enough money to carry me through October. My very first iBond contribution was actually in October of 2021, so I don't need to last until May of 2023. I just need to last until October of 2022. Given that I have enough in cash to carry me through the next 6 months, I am not worried about $10,000 being locked up. Instead, I am much more focused on getting as much return for as little risk as possible. So that is it for our zero-based budget for May of 2022. This is how cash moved in our household in May. We ended up with income a little over $18,000, expenses of a little over $16,000, in. And finally, we ended up with under $2,000 left for the month for saving and investing. And we found ways to allocate that money, maximize our returns, and save for the future. I hope you enjoyed the video. If you have any budgeting tools, tips, or tricks that you want to share, please feel free to post them in the comment section below. If you have any questions for me about money in general or specifically about our personal finances, feel free to post them as well, and I will be sure to answer them. I hope you enjoyed the video, and I will see you in the next one. I would like to continue sharing my thoughts on all things money with you. So I would appreciate it if you could help out the channel by liking this video and sharing it with anyone you think might benefit from it. If you want to see more content, be sure to subscribe and hit that notification bell so you can know when new videos come out. I'll see you in the next one.